SBR will not require you to calculate the ratios and talk about the result. No. SBR is going to test your ability to discuss the accounting mistakes or manipulations on the perception of the financial statements. And the most important types of ratios that are going to be tested are financial risk ratios. So if we're talking about gearing, which is debt to equity, we most likely are going to be tested in question 2 by given a scenario where a company mistakenly recognizes something as equity instead of a liability. So let's say preference shares were recognized as equity where they were supposed to be liability according to IAS 32, and that made gearing look over-optimistic. Maybe sometimes IFRS 2 will be tested, so some share-based scheme was recognized as equity, but because the payment is with cash, it has to be recognized as a liability. And sometimes we will have lease accounting. So if the company does not perform lease accounting by recognizing right of use asset and lease liability, and instead expenses the payments in the period when they paid, in this very case, liabilities are going to be understated and gearing will look too optimistic. Interest cover takes operating profit and divided by finance cost. So we are going to talk about the same, right? These are all the impact on finance cost. And maybe even we will be tested on IAS 23. So if interest was capitalized when it was not supposed to be capitalized, then finance cost is going to be understated and interest cover will look better than it actually is. We also have the one most important ratio, which is earnings per share. And earnings per share is profit after tax over the number of shares. So everything that is going to affect profit is going to affect earnings per share. So, for example, if we're talking about IAS 33, number of shares in calculation is going to impact earnings per share. Debt versus equity. Why? Well, because if that is debt, then whatever you pay as interest, this finance cost, has to be included in profit after tax calculation, and dividend payment is going to be excluded. And also, of course, we are going to talk about all other manipulations, like, let's say, revenue recognition when it was not supposed to be recognized, or lack of provision for unrealized profit adjustment, or depreciation policy being chosen wrong, or research and development capitalization. So, you need to be able to talk about the impact on how the users of the report are going to perceive the results of your company. And most likely you are going to be tested on gearing and earnings per share, but of course there could be other ratios. And that is how ratios are tested in SBR.